Finally, markets bounce back, led by a strong showing from Apple and the tech sector. The OECD has revised its forecast for Eurozone growth lower, stating that the situation is the biggest risk for the world economy. Fitch has lowered its debt rating for Japan and says more downgrades could come if the debt situation is not resolved. I'm Brittany Umar, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar with The Street, and together we bring you the morning call. So Scott, yesterday we got that bounce we had been looking for. We talked about it last week, and we got it yesterday. The S&P snapped a 6-day losing streak. Stocks rose more than 1%. So today the question is, can it continue?
At this point, when I woke up this morning, I saw the futures down 2 handles. I'm like, all right, that's good. Digestion's good. And now we're up a little bit. So I do think that we can continue to bounce. We were extremely oversold. That oscillator went to about minus 80. I think by the end of the day, yesterday was minus 40. That could probably continue to almost zero. We were down at like 9% off the highs. We bounced back about 1% yesterday. So I do think that at this particular point, you could ride this rally a little bit more, but it's very prudent to have resistance levels laid out in front of you so you know where the easy type move can go to and where maybe you could lay off, you could lay some shorts back on after, we see some type of move here.
Okay, so speaking of those resistance levels, if we take a look at the S&P chart, can you tell us which are the ones that we need to know right now?
All right, so let's go look at the chart of the SPX. First, I'll just show you this pattern here. This was that head and shoulders pattern. I keep showing it to you because they repeat themselves and I want you to know it. Here's the left shoulder, the head, the right shoulder. Remember this measured move that we talked about from 1420 down to about 1360? 60 handles, that took you down to almost 1300 or so. And we bottomed right here at, what is this, 1291, so pretty darn close. Yesterday, finally, we had a bounce move. Nice little bounce day. Nothing so crazy yet. I'll put up the chart of the spiders so you can see because I'm along the spiders from yesterday. I'll show you where I'm mapping them out. So here is day 1 of a bounce. I sold some on the close. I'm keeping some. I think day 2 or the next target could be this low here, which is around 133.13. So I do think that if you see 133 to 133.20, you sell a little bit more. But I don't think you just get short there. I do think over the course of the next few days, there's a possibility that you remember when we kept talking about this low here, the 134.49, that we can see this area. So I think this area is going to be the area that the bears are going to have to defend if they want to see lower prices. If we don't get to that area, then that's how weak we are. But at this point, I think you could stay with this rally up through here. We'll measure it along the way, and we'll see what's leading the way and what the action looks like.
Well, a lot of names yesterday that bounced well actually held their 100-day moving averages. Tech led the way yesterday. Of course, Apple right out in front. Let's start with Apple. Have we hit a new resistance level here?
Well, we did hold the 100-day. If you recall, we were talking sell signals, and Friday of last week, you saw some volume come in. Finally, some volume came in. We targeted the 100-day. We were looking for some type of red dog reversal. If you look here at the chart, yesterday I did buy it. You saw it on the virtual trade floor go green, probably around 536, and it closed really well. And yesterday, guys like, oh, you're going to take the trade, you're going to take the trade. I'm like, you know what? I'm going to stay with this one a little bit longer. I do think it's got a higher prices in front of it. Here was a sell signal when it broke to 620. Here was a sell signal when it couldn't hold that earnings gap. And this, to me, was a buy signal. So I do think you're going to see some resistance as you come into this area, as you come into maybe 570, 575. But as long as it stays, I would say, above the top third of this range, because it probably goes up, flutters around. As long as it stays above, like just say 555, I do think there's going to be another chance to get a nice juicy entry if it breaks this descending trend line. Because right now what I do see here is a descending channel, and it would be very, very healthy if it could break to the upside. So at this point, I'm long it, take trades along the way. It's good to see it providing some leadership.
A lot of go-to names held higher yesterday, including Amazon. We saw positive tones out of Amazon as well. Did not break Friday's low. How strong does this chart look right now?
This chart changed a bit because when the weakness came in, it started to trade into that earnings gap. And we were talking about that earnings gap to trade against. So some guys got very confident to the short side, rightly so. The market was getting weak. And then yesterday, they got sent back on their heels a little bit. So if you look at the chart here, you will see this was that earnings gap we were talking about. Remember, your first signal was to get out when it broke below 222, and then some guys even shorted it through here. And then you had nice little follow through to the downside, but from about 230 down to as low as 212, nice trade as far as short side. So yesterday you did see it match this weakness with some strength. I would say today for a Q-type trade, if it can get above yesterday's high here of just say 220 and pat back in, I think you get a little trade back to this area, but there's going to be a lot of resistance there. I guess now take this out of the way. You somewhat have a bigger earnings channel that you need to trade against, where here is your micro resistance and here's more resistance, and now you have two new points of reference for support.
And eBay also on the rise, climbing 3% yesterday. What about today?
eBay is very similar. It was trying to hold the earnings gap, and then it got a little faulty because everyone was throwing in the towel. What I thought was constructive yesterday was that a lot of these names that fundamentally have low PEs and are doing better, they were rewarded yesterday, as it seems like they kicked Facebook to the curb and all those high valuation, high metric type of scenarios. And eBay, that's been in the game, did the same type of thing as Amazon. As eBay tried to break below this earnings level, remember it couldn't break above here because the market wasn't strong enough. This broke below, but actually, if you look versus Amazon, it traded back above Friday's high, so showing you a little bit more power. So at some point, this channel should continue to be worked on, and this base will be built, and then when the market finally gets traction, this will be a go-to stock to look at, but it's going to have to clear what will be a descending channel. Just the question is from where and how long is it going to take.
Well, banks were weak yesterday, but credit card stocks actually fared better. Visa and MasterCard both reclaimed their 100-day moving averages. Let's start with Visa. Is this a candidate for new highs anytime soon?
I'm not sure new highs yet, but it just shows you how you could trade these, and it could show you that not only do you have strong stocks in tech that held their 100-day, you had these credit card companies that we've been trading back and forth. And if you look here, the last strategy was actually a short. The last strategy was right here when it broke below 115.83, gave you a move down to what? Oh, the 100-day. What did it do? It actually held the gap where you saw the rest trade into it. So overall, it's still stronger. And yesterday, it actually traded above Friday's high. So, this is still in the game. I think macro investors, like we've talked about, stay the course. It held the 100-day, still holding this gap. A micro trader probably was able to catch a cute short here once it broke this level. But at this point, I think it's got some room to bounce back to 117, 118. Not that compelling from a trade side. Yesterday was your trade, and I think just investors stay the course.
And Toll Brothers also showing relative strength. Earnings are, of course, on Wednesday. So what's your game plan ahead of them?
Well, this sector, I'd say, got a little pressured last week. We were talking about that tight pattern in the XHB, talked about Lennar's outside day. Toll Brothers had an outside day. But all that did is give you a correction, a cute short, a way to lighten up. But if you look at a lot of these home builders, not only did they hold their 100-day, they held higher when most of the other weak indices actually went to their 200-day. So if you look here, I've been avoiding the home builders, and that's fine for lately because I wasn't sure. Here is that last little ascending channel right there that broke to the downside, cute little short, but then it held bigger support. So it just shows you your time frames here. So at this point, it's above the 100-day, above the 200-day, above the last breakout. So the home builders themselves are actually showing some strength. And if you look real quickly at the XHB, just to throw it up there, this was when they came under pressure. This is when it broke this ascending or high level channel. And then if you sold it here, why not try it into bigger support? And that's how you trade different time frames at this point. I think there's some room to retest this, but I'm not so enamored to get in there.
All right, well, not all stocks performed as well as some of these go-to names. We're going to go into the trenches with some weaker names right after this break. Stay with us.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
While strong go-to names held higher yesterday, weaker stocks did break below Friday's low. Let's start with Las Vegas Sands. Scott, you're long the stock right now, so what levels are you watching?
I've been trying to find this red dog type reversal probably 3 points ago, and each time I'll be getting a little chopped up. And then finally, if you do with the plan, you lose a little, then you make it back when it finally works. This stock definitely gave you some sell signals over the course of the last month, and then finally yesterday, potentially the pressure's off. So if you look here at the chart, you will see here was that outside day, a signal to sell some. Here's when it broke 56 going across, another signal to sell some, and then finally, after just dripping and dripping and dripping lower, you have this little red dog reversal. I've talked about this strategy many times, and here it is. What happened was it broke below 46.15, got people out who've been trying to, catch a dip this entire way, which you haven't been able to. And then finally, it traded back above it, 46.15. So that's your buy price. You put a low in or a stop in at the low of the day, which is about 50 cents below it. And then you had a nice trade closing on the highs. So I'm going to stay with it. I'm not sure if you could do it in one day, but typically, if you could hold at least, the top third portion of yesterday's bar, you get another trade as it breaks this lower pivot. And I do think that we could see a move or an oversold bounce at least back to 51.59. So I'm going to try and stay with it as long as it holds yesterday's low, which is again 45.66. And then I do think there might be an opportunity to add as it breaks this lower descending trend line for what could be a bounce to 51.69, and then we'll have to figure it out from there.
Well, speaking of weaker stocks, BIDU has lost most of its gain for the year at this point. So where is resistance and support for BIDU right now? Well,
BIDU's been somewhat broken. A lot of the Chinese names lost a lot of faith just because of the news that goes on with them. They don't trust their accounting, this and that, blah, blah, blah. P.S. BIDU is typically one of the strongest names that people turn to, and it's been just weaker in this horrible environment. So yesterday you did finally see a potent day that could relieve some pressure. So if you look here at the chart, you will see that definitely not one for for the faint of heart. And if you look here, this was the last time BIDU failed near big time resistance. Okay, and then you had a low level consolidation after a big move down. What does this look like to you guys? A bear flag, right? Here's your pull, here's your flag, and then it continued. So it did hold, I guess, above this previous pivot, which was a nice place if you were short to cover some. And then if you take a real close look here, you will see, I wouldn't quite say so, to chase this thing. The strength is big, but I guess if the bounce continues, people are used to buying this. If this were to start trading above yesterday's high of about 122, or maybe even above 123.39, this bounce could take you back to, actually I wouldn't even say that long, maybe 127. So here's your playground for the bulls, and then people who are looking to re-short it, you probably could, take a look here at 127.50 to 130, and this would be your add above yesterday's high.
Well, F5 Networks showed some strength yesterday, but this is a high-quality growth stock that has just been pummeled in recent weeks. So is the pain likely to continue, or could it possibly be over?
I think it's a little bit in bounce mode like everything else. It's not much to talk about. I'll just go to the chart real quick. If you look here, you will see that, again, what could you have seen to get out of the way if you were long it? First things first is when it broke this big time support. So here it broke the support, went into the gap, that got rid of this buying pressure here, and yesterday, little reversal, traded below the previous low, closed strong. I'd say you got room back to this area. This area is about 122.30. So just like everything else, there's a little bit room to bounce, and then you need to see what type of resistance comes in and does it stall the stock. I'll avoid this one. I think I'd rather watch VMW or maybe even Salesforce.
All right, well, touching back on those banks that we talked about that were so weak yesterday, Goldman Sachs below all key moving averages. So will we be able to see more of a bounce going forward?
This one has just been a trade. It's been a better short than a long, and after getting so abused, yes, we could see a little bit of a bounce. The banks were not the place to be yesterday because JP Morgan lowered some estimates on a whole batch of them. Then today, I think Goldman raised JP Morgan, so it'll be interesting to see if they could bounce a little. If you look here at the chart of Goldman, it's just gross. Here is your last somewhat of a ascending uptrend. This is when you had a small outside day. This is when it broke support, a way out, and then you had a few different wedge type patterns that broke to the downside, and it continued. And PS yesterday, finally, after filling this gap all the way back from the beginning of 2012, so I think it's almost flat on the year, it bounced. I wouldn't get so aggressive here, but if it were to start to get above this little pivot here of 97.90, I guess you could have a bounce back to 100, and if the bounce is even more than I think it could be, it could try and fill this gap or at least get to like this 103 to 105. But at this point, I'd be very quick to pull the trigger to the downside in the bank. So trade long versus 94. There is a small chance that this too could bounce to this gap area.
Well, you mentioned JP Morgan, so let's just touch on that really quickly. Obviously, the chart looking pretty ugly. So, I mean, it's now negative on the year. What now? It's
tough. JP Morgan's such a tough call. I tried being long it yesterday for that strategy, the red dog reversal strategy, and it got me. I'm like, the market's bouncing. JP Morgan can't have one up day. But the more people look into it, the more they see that this problem's not going to go away anytime quick. It could take 3 months, it could take 6 months. You know, you look here, if you're just holding your nose and going underwater, you're probably drowning. But anyway, you know, there hasn't been a bounce ever since the news. This was the news. Here is your attempt to trade a bounce off the news. So if you held when it went below 35.76, you know, you made a choice here. So now it's come all the way back into, you know, below the lows of the year. At this point, I would just take quick trades unless you have a really long-term time frame. Here is your new point of reference here. This low is 32.26. I guess trade long versus that. And then if it does start to trade above, you know, this 34 area, which I think will be tough, you know, this I think 36 is going to be a brick wall. So I would think it's not a long shot, but there's a small chance to get a bounce to there, but I don't think you're going to need to rush into this thing with any type of size soon.
All right, let's do some quick hits here. Google had moved down last Thursday and Friday, did hold above Friday's low yesterday. What's next for this stock?
This one, I think just long-term investors stay in it as long as it stays above the 200-day. Short-term traders just trade a level versus a level, and the next big resistance here is around 617.
And Expedia's looking good. Where's that breakout level?
Expedia has been one of the chosen ones. It's in the gap. It's holding well. Take a look at the chart here. You will see that at some particular point, it does seem like it's going to want to get going. This is my level here with Expedia. I don't like the company. I don't like what goes on there. But anyway, who am I to like it or not? But above 43.22, this could be one of the stocks to make new highs first. You know, trade it long versus this 39.60/40 level. So this is hanging in there real well, whether it's because shorts are trapped or I don't know. You know, don't fight the forces of will. Above 43, you're going to see another squeeze, and it could be at new highs.
And Cirrus Logic, kind of an interesting story. The company's closely tied to Apple. The stock's been acting well. What does the pattern tell you?
You know what, this pattern also, nice bull flag continuation pattern. You look here real quick, you'll see big gap up. Then what did it do? It did what Red Dog likes. It held the gap, showing power, turned up yesterday. It's hard to add to much in this type of tape, but I would say above this 26, you could see a move back to 28.25, and this is a candidate to make new highs, even though this market right now is not looking for candidates to make new highs.
And Starbucks closed the day well yesterday. It broke a 2-day pivot high. Was that enough corrective action for the stock?
I think people love to buy Starbucks, and anytime you can get it on sale, it's a time to look at it. I didn't look at it yesterday, but it does look actually pretty nice considering, you know, if you guys remember, this is one of your rules. If you remember, I was here with Jill. We were talking about a shooter strategy, about you could buy Starbucks here at 50, and it had an enormous move. And people were saying along the whole way, can I buy now? Can I buy now? I'm like, don't chase it. You know, we buy pullbacks. What did it do? Came back and retested this area. Yesterday showed some power, eclipsing these 2 days. I think you could, I think you could still buy Starbucks, but, there's going to be a big time resistance right around here. So you want to talk about levels it can get to. I think Starbucks can get to about 56 or so. So it's about 2-3 points of upside for an oversold bounce. I would look to see how this acts to judge whether or not a bounce can continue also.
And finally, what does AOL's pattern tell you right now? Is it poised for a breakout?
AOL. Wow. I think it's changed ever since they sold a big portion of their licenses or whatnot. I have not traded this in ages. I don't know why, but I guess this thing does look pretty damn good. Look how it's near the highs, it's above all the moving averages. I know there's a ton of shorts caught in here. This thing starts trading above 27.12, or what is this, 27.50? Let me take a look at the weekly chart. It'll be at highs of this move. Look at this. Geez. You know, maybe Yahoo should give them a call and see what they're doing right as far as their stock action.
All right, so as we round out, what's the main thing you're focusing on heading into trading today?
Just to see how long I could stay with the longs. You know, I want to get more longs. I only have 3. I think I'd like to see if some of the banks could join the bounce because they did not yesterday. See if JP Morgan could act better. I like the fact that Apple's leading, that tech's going along for the ride. I'll trade for cash flow. If some of these things could start trading above those lower pivots, I'll probably add. I won't add a lot. And then once we get to just say on the spiders 133-ish, I'll probably be winding down to not many longs to judge the action. And then, you know, in the coming sessions, if we do get up to 134-ish or so, I'll see if I could put shorts back on because we said last week, high probability cover until late last week with the oscillator so high, with the measured move met. You know, now's the time for a bounce. The question is it going to be a lethargic, feeble one, you know, that adds up to nothing as we still have these complicated headlines, or is there some strength and power and was 9% enough? Well, we'll figure that out along the way.
All right, good stuff, Scott. Thanks so much, everybody. Happy trading and have a great day. Live.